to, if not altogether, not conduct any short selling, at least to constrain it so that there will be limited pressure on the downside.
Absolutely. And some folks are saying that so many sectors are already trading near 52-week lows that maybe they are already undervalued here at these levels. It will be very interesting to see what happens on Monday morning.
And Christine, I can't wait to tell you and all of our other viewers, share with you some of the comments, the many comments we received from viewers about what they're going to do Monday and what they recommend that others do. Christine, thank you very much. The Treasury Department announced that it has established a team to target terrorist fundraising. Officials saying that that task force will include representatives of the FBI, the CIA, as well as, of course, the Treasury. The Treasury Department saying that team will eventually become a permanent foreign terrorism asset tracking center, meaning they're going to try to find out where the money for terrorists comes from and precisely where it goes. For more perspective now, we turn to Jeremy Siegel. He is professor of finance at the Wharton Business School. Joins us tonight from Philadelphia. Jeremy, good to have you with us.
Good evening, Lou.
As a student of these markets, certainly one of the country's ablest and most knowledgeable observers, give us your judgment about the likelihood that we're going to see these markets open Monday, that importance of that event, and of course what will happen.
Well, certainly I think opening is important. I think trying to get back to normal will never be normal again, I think, but in a functioning mode is very important, and I hope they will be able to do it. I also hope, Lou, that the Fed will act very aggressively. I'm actually hoping that before the opening on Monday that they may lower the Fed funds rate by 50 basis points. I think that would be very important, yes.
And why do you see that as so important as compared to providing all of the liquidity that the Fed is making available, both in the international banking system as well as in our American banking system?
Well, they're providing the cash that individuals want to take out of the bank. That's what the liquidity is. It's very much like Y2K when people wanted to take out funds. And that's all well and good, but that doesn't actually lower the interest rates. And you've been looking at the Treasury markets. They're expecting sharply lower rates. They'll be disappointed if the Fed does not follow through.
Jeremy, I think one might even say, in addition to expecting, almost demanding it as we look at what is happening with the two-year note in particular.
Absolutely.
What is your best guess? And we acknowledge, I think all of us, including certainly you, perhaps you first among all, that any prediction here is simply that, a guess. What is your guess as to what the markets will do, what investors will do come Monday morning?
I think there'll be huge trading. I think trading might set an all-time record on Monday. I think there'll be extreme volatility. I can see the Dow maybe opening down 300-400 points, then surging up 100 and back down, swings that we really have never seen before. I think it would settle down at the end. I think we have to settle down at lower levels because if you take a look at Europe, if you take a look elsewhere, you will see that there hasn't been a recovery in other markets, and I don't think we'll get one here.
Jeremy, let me throw a contrarian bullish outlook at you to see what you would make of it. As we watch what were remarkable services all over the country today, a rather inspiring, I must say, display of patriotism in this National Day of Mourning, is there in your judgment room here for some of the experts to be surprised and to see a positive outlook, an economy and a society in this country assert itself more positively, a stronger level of confidence rather than a weaker level of confidence?
It is really heartwarming to see how people have come together, and certainly that is the strength of America. But if we look back, there's no way that this can be positive economically for our country. And as a result, I know I've been hearing some things you have to be patriotic and buy. The problem is, you know, if people do that and then the market goes down later, they're going to feel very resentful because finally the level of the prices is going to be what the level of the economy and the earnings are, no matter really who buys and sells on Monday.
Jeremy Siegel, as always, good to have you with us.
Thank you very much, Lee.
Well, trading today did resume on the New York Mercantile Exchange, but not without some serious problems. Electronic trading did begin at 2:30 this afternoon Eastern Time. It was halted just moments later because of, as you would not be surprised, because of some technical problems. Light sweet crude oil soared more than 8% in those minutes of trading, gaining more than $2 a barrel. The action resumed again at 4 o'clock. It ended just minutes ago. We don't have an official close yet, but light sweet crude oil was higher, up again just about $2 as of about 15 minutes ago. Bonds today surged in price for the second straight day, and investors are continuing to look for a safe haven. Lisa Leiter in Chicago with that story. Lisa?
Lou, for the second straight day here at the Chicago Board of Trade, the mood was somber and trading was thin, but trading was orderly, and that's something that traders say was very important, and prices were much easier to come by than they were yesterday. And in the early going, the government went ahead and released regular new reports on retail sales, producer prices, and industrial production, although those reports went largely unnoticed in the bond market. Instead, here, traders spent a lot more time talking about their friends and colleagues in New York. They swapped survivor stories, and they showed their patriotism by hanging a pullout section from the Chicago Sun-Times with the American flag on it. Again today, Lou, like you said, investors sought the relative safety of short-term government debt. The two-year note surged with that yield falling to a historic low of 2.86%. Lou?
Lisa, thank you very much. Lisa Leiter from Chicago. And now joining me to give us some perspective on this bond market, and in particular the activity and what we can expect in the days ahead, Kathleen Hays. Kathleen?
Well, you know, there have been so many interesting themes touched on, Lou. I really don't know where to start, because I think there's two important themes coming out. How is the bond market functioning, and how is the economy functioning? In terms of the bond market, let me start there, and let me try to explain to our viewers. You say, the bond market, that's not necessarily my market. I'm not going to trade there. But remember, this is really kind of where the lifeblood of our financial system flows, through the bond market, through the credit markets. It has to be functioning fully and well for this financial system to be fully back on its feet. Like this entire city, people are trying to get there. And in fact, as Lou just said, second straight day of trading, 2 days of rallies. But there are some little glitches beneath the surface. People are working out of back offices. Back offices are not like full offices. The computer systems may not be fully operative. Brokers, in fact, are not able to look at screens. Dealers are not able to look at screens as they were, except in very limited market-making ways. In fact, one guy I talked to today said, I'm doing this like I did 15 years ago. I'm calling up the phone to ask about prices, you know? In terms of the economy, let me say quickly, I think you're very wise to point out this contrarian view. The markets are calling, Jeremy Siegel calling for this aggressive rate cut on Monday. Remember, Bob Matier Wednesday gave a speech, said it's too early to judge the macroeconomic consequences. I think that's going to be the story at the Fed. We may not get that cut as quickly as people seem to want it.
Okay, Kathleen, thanks. Kathleen Hays. Well, the disaster at the World Trade Center has, of course, affected almost everyone, and certainly the people who often offer guidance and some direction and advice right here on Moneyline. Economist Diane Swonk, principal among those, and she joins us tonight from Chicago. And Diane, just a few days ago, was outside the World Trade Center running for her life as that first plane crashed into the World Trade Center. Diane, it is good to have you with us, and we're glad you're safely back in Chicago. Tell us, if you could, what happened?
Well, briefly, I was in the World Trade Center, and thankfully for Kathleen Hays, I had someplace to go because Kathleen put me up for the last couple of days, and as much as I love staying with her and her family, they were wonderful to me. I'm glad to be in Sweet Home Chicago. It was an incredible event. It felt like an earthquake. The Marriott was incredibly good at getting us out. Only thing I kept thinking the entire time was I felt somewhat responsible as a leader of the National Association for Business Economics. I had chosen the World Trade Center as our location. I had some students with us, and we were, the whole time I just kept trying to get people to keep moving forward. As people looked back, they began to panic at what they were seeing, which was a horrendous sight. And what I kept doing was just getting people to move forward, move forward, move forward, until finally everyone was placed and taken care of at the end of the day. I had to walk my way all the way up from Battery Park to our offices at Bank One, and then to Kathleen's house up in Upper Manhattan. And
then you by automobile back to Chicago because, of course, no airline.
I got an
travel.
automobile, a luxury a limo back to Chicago that broke down. My father had to come pick us up. They also tried to gouge us, but I came to work today for a very important reason. One, my people needed to see me there, and I wanted to prove a point that you can't take us down. We have to keep moving forward and move on, and that's why I'm here today.
Well, Diane, the markets trying to reopen, certainly the equity markets Monday for much that very reason. Your judgment, your best judgment about what we should expect over the course of the next several weeks.
Well, I think Kathleen made some very good points about this issue that the Fed should cut at the onset. We need to see what's going to happen first before the Fed moves. They will move. They've stood up and said we're ready to move. Congress is going to be pouring money into this economy at an extraordinary pace, moving from 20 to 40 billion now just allocated to this crisis alone, increased expenditures on security. The outcome for the economy, although the upfront losses are clearly there for this market, there's also signs for a ray of light at the end of the tunnel, or the silver lining to the horrible gray cloud I walk through. And I think those things will help keep the market calm. We've seen orderly, Lisa used the word orderly, bond market trading. I think there is a real attempt here to try to keep these markets as calm as possible, and we may not see the big price swings, the big dramatic effects that many people are looking for, because I think there is a real resilience and a real attempt to agree to that right now, and I think that's very important.
Well, it is good to see you, Diane, and we're glad you made it safely out along with all those who did, and I know
Thank you, Lou.
you, like we here, joined those who lost friends, family, loved ones, and colleagues who did not make it out. Diane Swonk, thank you.
Thank you.
The attacks on the World Trade Center brought the financial district down. Millions of square feet of office space have been lost. That means lots of companies have to find a place in which to do business. And Peter Viles has that story.
I think what we could simply do there is thinking if we have the space, is just put two people in the same room temporarily.
Well, I think in a cubicle.
In a cubicle, yeah.
CEOs do not typically worry about who shares a cubicle, but these are not typical times. This is the old American Express headquarters, structurally sound but damaged. Ken Chenault is moving 5,000 workers, some to this new headquarters in Jersey City, others into two larger leased spaces in the Jersey suburbs.
Fortunately, all of our core operations and processing are outside of our New York headquarters building all around the world, so we have had virtually no interruption of service for any of our businesses across American Express.
15.5 million square feet of office space was destroyed, another 12 million damaged, meaning the city's businesses are now looking for 27 million square feet of space. American Express has already located nearly 1 million square feet for itself. When you include suburban office space, metropolitan New York has 46 million square feet of vacant space available. The problem is finding enough large spaces to replace what has been lost.
It is a game of musical chairs right now, where the major companies are out really in a frenzy looking for the larger blocks of space. And commitments are already being made as we speak. So we will be essentially out of large blocks of space by next week.
The scramble to find that space, though, is overshadowed by rescue missions. This staging area is just footsteps from the new American Express headquarters.
The focus has really been on the victims, their families, the rescue workers, and that, I have said to employees, should be the primary focus. The business issues pale in comparison.
Another gentleman's agreement to report tonight, Lou. We understand that several large landlords have made an agreement, an informal agreement, to keep their prices at last week's level, essentially an effort to stop any price gouging in commercial real estate in this city before it starts. Lou?
Yeah, profiteering is not going to be a popular activity, nor a very smart or healthy one, I think, in these times. Peter Viles, thank you very much. Well, Chicago's Midway Airport, a private airport south of Chicago, was shut down today after police detained 2 people for questioning there. Police have not yet said why those 2 were detained. Elsewhere, most airports were operational, but at only a fraction of their normal capacity. Of course, all of this has had a major impact on the airline industry, but it does appear tonight that some help is on the way. Congressman Richard Gephardt talking about $12.5 billion in direct support for the industry. Kitty Pilgrim is here and has the story for us. Kitty?
Lou, Congress is requesting a major bailout for the airline industry, and Wall Street estimates that it's about $4.4 billion in losses this year alone. Airlines absolutely have to start flying. Let's go through the numbers on what's going now. United Airlines, which lost 2 planes in the tragedy, completed 84 flights yesterday, scheduled 500 today, and that's out of 2,300 normally. American scheduled 800 flights today, but then had to cancel.